Welcome to Talking Sens. Today I have a co-host with me, Mr. Farhan.
Hello, don't mind me.
Yes, and as I mentioned, we have a very interesting guest today. He's going to talk about tax, Mr. Ganesh. Ganesh has been involved in tax for the past 15 years. Okay. So, Mr. Ganesh, maybe you can introduce yourself.
Okay, first I would like to say thanks for iMoney and Mr. Ravin and Farhan for inviting me to the show. So just give some background about myself. I'm Ganesh. I've been working with 15 years of experience, 13 years in tax. And my experience mostly goes around with the MNCs, which is I've covered industries like loyalty programs, pharmaceutical, IT, and also logistics, and also part of banking as well. My primary area of focus will be the corporate restructuring, like setting up entities, where is it, how to move around the entities, and also will be on cross-border transactions, handling tax audits, and also in the international tax.
Okay.
Yep.
Interesting.
So this has given me some kind of exposure to different business models and the tax implications of it. So how to handle it across different countries, how to structure the organization. So that was a bit of a background about me myself.
So
Interesting.
So what I'm hearing is you have a lot of experience paying income tax.
It's part of my job as well, so I need to handle that.
Yes, I think when we talk about tax, there's some basic thing that usually we'll ask, especially when we talk about personal tax. Okay, in terms of what new elements that we should look for this tax season.
Okay, for the year 2023 submission, which will be due by April, normally LHDN will give a 15 days extension. So it will be up to 15 May for the e-filing. So the new taxes to be given will be in terms of the medical health for the parents to claim for their kids. Those who have with learning, some kind of learning disabilities, they can claim up to 4,000 per year per child for that. But the checking has to be done by a approved doctor.
Okay.
Yeah. So you can't just make it the same. It must be an approved doctor.
So what is an approved doctor?
It's recognized by the medical council.
I see. So you can't just go to any doctor and just go there.
It must, because these kids are the ones with learning disability, so you must give to specific doctors who can handle that. Not like a normal GP can just walk in to get that. This must be some doctor who need to certify that the kids are having learning disabilities.
So the learning disabilities are like Asperger's.
It normally comes into like Down syndrome or autism kids.
Okay.
So in this kind of category, here the parents can claim it, or if the parents are divorced, then they also can claim either who spends on it.
Okay. So if they're divorced, both can't claim. One has to choose then.
Yes. One has to choose who incurred the expense.
Okay. So if they're sharing the expenses, then...
Okay, if you're going to share the expense, then it has to be quite clear how you're going to claim it.
Okay.
Because you can't claim it like one person, both sides claim on the same amount. So you have to claim it accordingly. But you must have a proof to say that this is what you have spent.
I see.
Because the receipt is just the first part of it. Subsequent, during an audit, they can ask you for your, let's say, your credit card statement or something, just to show that this is what you have paid.
I see.
Okay.
And this is something that only this year?
It's announced they say it will be continuing. Even for 2024, the government is continuing that because the government wants to support all the entire society.
Yeah, I think this type of tax should be continued. It's not a one-off type of thing.
Because the kids will require a lot of expense, so just to reduce the burden of the parents.
Exactly. Yes. When you talk about kids, it's up to 21 or 18?
Up to 21.
21.
Yes.
Right. Now, when we talk about gig economy, okay, that's have changed how people make money, okay. But how these guys all will be submitting their tax filing?
Okay, for the gig...
Or do they need to do?
Okay, for the gig economy, still you need to submit your tax return because as long you earn more than 34,000 in a year, your income is subject to tax.
Okay.
So it's roughly about 3K a month. If you're going to earn more than 3K a month, it will be subject to tax. So now the main problem will be, should I declare it in Form B or Form BE, which is the individual carrying with business or individual without a business income. So that is with individuals without a business income will be the Form BE. So in that case, normally your nature of your income will determine which category you should go through. So normally employment, if you're going to receive instructions from someone, you're going to have an employment contract, or you're going to work in the fixed hours, you don't have much say in it. You will be somehow bound by some kind of an operating nature. So that will normally go under the employment side. So if your side income, maybe you can do just some very side income, which is in extension to your employment, you can just use the Form BE for the others category to put the side income. But if your main business, if your main source of income itself is some kind of like, in these days, like the freelancers or the one who doing their own consultancy.
Okay.
So the one doing like, even for the gig workers, they can also go for the Form B, but provided there's a lot of pitholes in it that you need to be careful in filing that return, because that return will require some kind of understanding in filling up the form.
So basically, like somebody who is influencer in TikTok or what, so they have to do the same thing, either Form B or BE.
Okay, if they can go by the if they can handle the challenges of the Form B, they can actually go by Form B, which is the 1% with carrying with the business source.
Okay.
So because when you're doing the Form B, you can claim all your related expenses in incurring your video, something, maybe your recordings or your cost of you incurred in doing that business. But all this need to be supported, and you must have a proper team to assist you, like people to assist you doing your accounting, your financial statements, because it's by law you're not required to appoint a tax agent or an auditor.
Okay.
It's all done by yourself. You're like a sole proprietor. So if you're going to have a Sendirian Berhad, if your income is more bigger and you need to handle in a much more organized manner, then you can take up a Sendirian Berhad, which will come up with its own preferential tax rate. But for a sole proprietor, is following your own income-based tax rate, the tier tax rate.
Yeah. But I mean, if you look at all the influencer or the TikTok guys, girls, do you think they have a company, or how they want to? I think some of them is just out of hobby, then end up
they're just
getting
home
profit
with their camera.
Exactly.
And they don't really.
How to go about that?
Okay, if you're not, as long if you're not going to earn a significant income out of it, then you can just actually, it won't be really subject to tax. But you have to think it from an overall perspective. Let's say I'm already working somewhere and I'm going to do this in my free time. And let's say it's even though going to incur me something, but my overall income is already subject to tax already. So then it will still come into the bracket of tax. So you can't just take it into two separate things that, okay, this is my employment, this is I take at the overall income level. So that will exit. So you come into tax.
So you can't say, no, this is my employment, this is my hobby.
You can't, because you have to see the hobby, how you're doing it. Let's say you're going to do it very actively, you're always posting content, you're quite famous, you're getting a lot of money out of it, then it's not really a kind of hobby already. You're really doing it as a kind of a business. But let's say maybe you just do maybe like once a month a video or something, and the video don't have much likes or something, or not much views, you're just like, don't really bother. Sometimes you might just go silent for a few months, then you're just making something. Then you can say for hobby, you're not really posting it online. You're just like doing it in your own kind of a blog or something, and you're not really, there's not much income out of your earning, and you're just doing it for sake of information. Those things would not be coming to the tax code.
Okay. But do the government can track all this?
Okay, I think LHDN have a team of this kind of the analytics people, the data people. They will be looking at this kind of like someone suddenly getting so much of posts and people are being sharing. They are monitoring that. So if now, let's say, if you're not really if you're not really paying your taxes or something, they might just call you like, okay, just visit our branch. It won't immediately kind of an audit. They'll just inquire what you're doing actually, where the source of the income is, how you're earning the income. Because currently, let's say if you're going to earn the income from overseas, currently there's still an exemption for individuals. So they will do some kind of a background check first.
Okay.
So you're saying that there's literally a team at LHDN that monitors social media to make sure that you're paying your taxes on your sponsorships.
Yes, they will still do check to a certain extent. It's not like every day they're going to open and check everyone, but there's a team to check this.
So the moment you start getting famous, you go viral, then they notice you.
Then you'll fall into the list.
Oh no, don't get too popular.
Yeah, exactly. Okay. Like again, when we talk about the influencer or those in the gig industry, okay. So even if things that they spend okay, things that they purchase, okay, so can be claim exempted?
Okay, if they're going to do a Form B, okay, now so a Form B, let's say for a sole proprietor, so they can still claim the business expenses, but it has to be very clear it's a business expense, not their personal expense. Now, let's say they say, I'm going to use my car to travel somewhere, to take some video. So the car also will be used for personal expenses. So they have to properly apportion the expenses, which is go for business, which is go for personal. So this is where the tracking will be more important. So they need to record all this, and because when it comes to audit, this is where you are going to support whatever expenses they have claimed for. So you need to actually have a proper record. This is where accounting will come into the picture. How you record the transaction, how you track. Now let's say even for the gig workers, let's say for the P-hailing or the ride-hailing, they can actually have kind of their job, maybe the job list from the portal or something to be saved. Okay, this is how much hours that I've incurred on the work. So they can take it overall. This is what my cost has incurred. But there has to be a thing to record all this.
Okay.
So I ask, because you brought up those Grab drivers and all. So I understand that generally they should be filing under Form B because it's kind of like sole proprietorship.
Yes.
But can they say claim their mileage or their petrol as a business expense when they're ferrying customers?
Okay, you can claim that, but provided you can claim for your fuel and everything, but you can claim provided there must be a portion to it.
Okay.
Because your car can be used for both.
I see.
So there will be an apportion. So here is determined that your fuel, how you're going to split your fuel is basically maybe you can claim it in terms of your kilometers. So normally there will be a proportion that 1/3 will be for your personal, 2/3 will be for business. That is the general guideline. But that depends on your business. If let's say you don't have that much of a job, but I mean that much of job list from your supporting document, but you're claiming a huge amount of petrol, then it will be subject to proof as well.
Okay. See, so if I do say Grab on the side, I should take note of how much I'm driving.
Yes. There must be a tool to record all this, and your other related expenses. Let's say like toll or something. I think in the Grab we already have a place for that to charge it all that.
Right.
So you can actually keep it as your. But normally in Grab you're going to charge a toll to your customer, so you wouldn't be able to really claim on that unless it's something that you're going to do for other business purposes. You're going to travel it. Then you need to record where your client place is, what is your traveling, how many kilometers. All that need to be recorded.
Yeah. When we talk again about filing in, how serious that we need to be when we do our filing? Because some guys are just keep on filling it and looking at the result at the end. You know?
I know someone who just said tick all the boxes.
Yes. So what do you advise on all this?
Okay, you can't just tick all the boxes or something without knowing the consequences of it. Because when you're submitting the return, you're already saying, okay, whatever you're being submitted is true and everything is being properly supported and everything. There's a checkbox down there as well to say that it's all submitted, is true returns and everything. So you need to be, when it comes into, you can just submit first, okay? Let's say you have submitted a wrong return. You still have an option to amend the return to avoid any kind of an hassle later on. But let's say now you are not being, you just submit it and just leave it.
Yeah.
And let's say you entered into some of the, how to say, the tax audit of the LHDN. Because they're not going to audit each and every one. So they will have some kind of a software tools which will see who are the high risk people in the industries. So let's say they might choose the high risk industry and how much is your peers in the sectors are earning, same age or same experience. I think they can do some kind of filtering. Okay. So they will see how much taxes are they paying and how much taxes you are paying. So then let's say you have been quite significantly lower than them, or something, then they can select you for the tax audit. The computer will tell them, okay, maybe these are the persons in the high risk category. Just check. So then they will best calling you for an audit or sending you a document like
lower means?
You are paying lower taxes.
Oh, okay, right.
Compared to your peers.
Okay.
The software will tell them some kind of hints on that. That won't be everyone that will immediately be penalized. Call you for an audit. They'll normally send you a letter. Kindly submit all your supporting documents. So you can actually email to the officer, or you want to submit it, go to the office, you can submit it by hard copy. But normally they prefer by email. It's easier for both sides. So then it will go through the audit process. Everything has to be supported. If anything, then you will incur some additional penalties, and they're going to incur on top of the under tax that you paid, and also the penalties will be coming in.
Yeah. I think one thing about, I don't know, certain culture that we have, we don't really think about tax until March or April. So we don't really keep the receipt. We don't really keep the documentation properly. Okay, so when we submit, we just hope that everything goes on well. It's not said that we under-declared, but just hope that everything goes well.
I believe the rule is you're supposed to keep your receipts for 7 years.
7 years.
Yes, that's the requirement.
Yeah,
Yes.
I lose my receipts in 6 months.
Okay, normally, right, there's other ways. Like myself, I always scan my receipt. I'll keep it in my online drives. So I will always keep a soft copy out of it. So if anything comes
So
up,
basically, whatever you buy, whatever you just
whatever I'm going to claim from my returns, I will always save the soft copy receipts into my online drive. So if anything, if I'm going to ban an audit, I also recently faced an audit. So when I came back, I'll just get back me all my documents which I have it in drive. So they actually initially charged a penalty, then I just let go the penalty because it was supported by the documents.
Oh, okay.
So
So your advice is to our audience.
You have to keep the receipts. There's no option because I think nowadays is mostly everything is online already. It's like not really much of hard copy receipts. I think everything's shifting into more kind of soft copies. So you can actually just take a PDF copy out of it, just save it in your online drive or something, just for your own safe.
Sometimes when we think about keeping receipt, like what you said just now, it's not every receipt that you receive. Okay,
Yes.
it's basically either your sports,
Or
okay,
is it,
or your medical.
Basically, whatever you're claiming for tax relief, I guess.
Yeah.
Yes,
actually.
normally we'll only keep that kind of a receipt
Yeah.
because you're not going to claim for a business person. Yes, let's say you're going to file Form B, then mostly every receipt should be subject to.
Yeah.
So for them, they have to have a proper filing mechanism to handle this. This is why you can go for B, which is to claim your expenses, but there are also its own disadvantages as well. You need to keep track of all these expenses. But for Form BE, it's quite simple. Let's say for your individual relief for 9,000, you don't need to do anything. It's automatically given.
Yeah.
So for that, you don't need to have any receipt. Now, let's say if you're going to spend for, your internet subscription, which is within the 2005, the digital lifestyle. So that one, you have to request a receipt. I think nowadays some telcos are giving a consolidated invoice for the tax purposes.
Yes.
Like a 1 year invoice, just
Yes.
for the amount to prove. So that one you can still keep it. So you must have your receipt somehow in a way to claim it. Now, let's say for your sports or something, I think that one can be a bit of a hard copy receipt. So maybe you can take a photo of it and just keep it online for safe or...
So it's basically it's not a burden lah.
It's not really
You just
a
need to
burden.
take a little bit of extra effort. That's it.
Yes, that will save you a lot. Because when suddenly if the letter comes in, you might have to submit all this within the timeline. So if you don't have a timeline, you need to ask them for extension.
Yeah.
So that is subject to approval. So all that might be creating some pressure on you later on. So just to keep it smooth, you can also, because for the year 2023, there are also some lesser income tax bracket. They have reduced by 2% the tax payable. So this will also help you to, when your expenses is higher, your tax payable will become lesser. So those in that categories can always keep their receipts much more on hand.
Okay, interesting.
You brought up the sports category for tax exemption, and there's one thing that I've come to realize in my many years working here in iMoney is that people don't know what qualifies as sports equipment.
So that's it. Basically, your equipment is considered.
That's very interesting because I've been told that the fencing sword is tax deductible, but like the outfit and the gloves are not.
Yeah, the outfit is won't be.
But the outfit is very specific for fencing.
Okay, that is something that you need to see whether it's is it really required for the sports or not?
I see.
Because if it's not really required, you can say I'm wearing a kind of very protective layer of clothes, let's say for some sports. If it's not really required just for your own personal safety, that might not you can claim for reduction.
I see.
But if it's required by the sports, let's say it's being mentioned in the thing that in order for you to play this game, these are the minimum requirements, then it will be deductible.
I see. So is there a place that you can actually look at these things, or is it up to the sport?
Okay, the nature of the sports is being defined by the Act, but exactly what tools you can claim is not, because it's going to be very wide, because the number of sports to claim is quite a lot, so it's going to be very wide. So you need to see it from a kind of is it the tools that require? This is kind of the gray areas, which you need to be quite careful because to claim it, because you need the specific tools that need to be used. The first thing, maybe your guideline can be, is it really required as a minimum thing for the sports?
But I think like Farhan, your fencing, that protection it's
Quite
compulsory or
Quite
basically
necessary.
mandatory.
So I think in like Olympic fencing, the shirt is actually electric. It's got an electric circuit in it.
Yeah.
So that's why I was like, but
Yeah, I mean, this is something that, okay, so this is something a bit of
The gray area
yeah, the gray area that
understanding.
you can discuss. So if anything comes up and you have claim and you have a valid reason, now let's say it's being really required for the sports or something, you can justify back this to the LHDN. So then it will depends on them to actually, because I think they also quite understandable. So if it's a really required part, it should be fine.
Okay.
Now we talk about cryptocurrency.
Okay, that's the
Is
one.
it taxable?
Yes, but depends on how you're going to handle crypto. Okay, crypto I think is the kind of the very hot topics or something which is very interesting. But crypto basically you need to look at it. Are you doing it as part of your hobby or are you doing it as part of your business?
Okay.
So now let's say if you're going to there's basically I think there's about the badges of trade. It depends on the badges of trade that we call it that will determine how you're going to handle the crypto. So now let's say if you're going to have large quantities of crypto, you are like actively buying the crypto at the different, your frequency of your transactions is going to be quite frequent. And you also like use a kind of like funding or something. Let's say you're going to borrow funds or something or to do all this. You're also going to do this like your motive of this is now, let's say, is also to make profit out of it. Not really kind of just keep it, but you really think of a mind, okay, I can buy this, it's very low, now I can sell it for high later on, your motive. And also how you are planning to like, when you want to sell it, are you trying to make it like kind of some kind of like a publicity for it? Okay, you're trying to get people to come to you and something, hey, I have this much, I can sell it. Who wants to buy it or something? And doing some kind of additional work in terms of selling it. And also if you're going to do some kind of, let's say maybe for some people they're going to do some kind of a study or something even before this. They maybe hire some kind of technical and professional people in doing, okay, is this the right thing to go in or something? All this will determine. It's not just one factor. All multiple factors will be considered to see that are you taking it as a hobby? Now let's say you can be just doing like maybe one transaction a month. You're just collecting it. You're not doing anything. You're not really actively doing it also. Whenever you have just time, you're just doing it. That is considered a hobby. It won't be taxable. But if it comes into a kind of you're frequently doing it, you are every day like buying something of it, or you're like frequently doing it, it will become as a business income already. So that you have to go in under your Form B as a taxable income.
So the moment I start buying and selling crypto, like say if I buy and sell Ethereum every night or every other night, then suddenly it becomes more of a business for me.
Okay, now let's say this is also depends on the other factors as well. So now let's say you have maybe you so far you just collected 10, let's say, and the 10 you just want to sell it off and just close it. It's a one-off thingy. Then it's okay. But if you're going to actively, you have let's say you have already bought 10 coins already. Now let's say 10 bitcoins. So now you're going to go and buy further. Then you're going to sell it all one by one, and you're having a kind of a trend where you buy it at a low and you're going to sell it at a high or something. That kind of a trend. So that shows that you're not doing this as a hobby. You are actually managing it. You're spending some time. So that will become as a business income.
Okay.
So it will be taxable.
Okay. So the amount is taxable the amount I sold it for, or for the value of?
No, it's actually the gain that you're going to make from the sale. So you have the purchase price, right? So when you are selling, the gain that you gain from that from the crypto.
Okay. So as long as I hold it, I don't have to.
So now let's say your length of you holding it. Okay, length also is one of the conditions as well. Not say you're going to hold it for very long. So then one day you just sell it off like what you said. That's maybe just 10 coins, maybe one coins a day or something. That is fine. But if you're going to do it like very short span, you just buy today, 3 days down the road, the price shoots up, you just sell it. Then you're frequently doing that, kind of repeating kind of a pattern. That will be that will be taxable. Your gain will be taxable.
Okay.
Do people often come and see you for help in terms of their tax?
Okay, that can mostly like a kind of people like friends or some known people. They will just come to like.
It's just like, sometimes it's just like doctor, if you are a doctor, when I see you, I'll ask, I got this pain. Does a tax expert also face the same thing?
Yes, that's very common. People just, the most of the questions will be, how I can save my taxes, where I can go in, where I can maximize my deductions. So that is kind of a common questions that normally we encounter. But the kind of, some kind of the more complex ones, let's say now, like some of them, they'll be running a few businesses. Suddenly they'll be facing an LHDN audit. So then they'll end up into a kind of a huge tax additional tax to be paid together with a penalty. Then they will come and ask, this is what happened, where it went wrong, or this is what have happened. So then only when I look into it, there will be multiple issues coming up. Like for them, it's all their own business, okay? For them, it's all like their business. So they will just maybe take the money from one company, they will just give it as a loan to the other company.
Yeah.
But in the owner's mindset, it's all their business. So they'll just give it as a kind of, okay, I borrowed you, let's say 50K. From one business to the other business. Then when the other business has the money, it will just pay back. But in terms of the law, this is two different companies. So you need to have a kind of an interest to be charged on it as well. Because in a normal transaction, you won't be giving the money for free. No one is going to lend the money for free, right?
Okay.
So they will look at it from that perspective. So when you're not doing that, the government is losing the income from the other company. So what they will now do is they will try to put a notional income of it. They will try to do a average interest rate, what should be charged for this kind of transaction. And they'll charge it, there will be an additional income that the tax that need to be paid on. Then there'll be a penalty on it and everything will be coming in. So this kind of things that some people will miss out. So normally they just ask over us, we just tell them generally. So sometimes, I don't know, just come one day, check in detail, then only we can know, okay, this is where the issues are.
So people come to you, like say every March income tax season, your phone starts ringing out like crazy. People start calling you.
No, usually March he'll go for vacation.
That is not to say like every day is going to be a call or something, but people will generally, okay, this is what the submission has started. The first thing they will say, okay, what kind of receipt I need? Okay, is my receipt sufficient? Okay, I lost my receipt. Can I claim it? Okay, now what is the definitions of me to claim it? Like sometimes you can say you also have a skill enhancement that you can claim for, but the skill has to be approved by the government.
Yes.
So some people just attend some courses like online courses, but you can't claim for that. I mean, it's kind of an overseas courses, so you can't be claimed from that. So that kind of people will be asking, hey, I have spent for this, can I claim?
So you cannot claim for overseas courses?
The courses have to be done in Malaysia by Malaysian institutions.
So all this upskilling must be done by institute in Malaysia or something approved by the government?
It has to be approved by the DG of the skills department.
I see, I did not know that.
It has to be approved by them. For you to claim that 2,000 ringgit, you have to be approved. For the 7,000 also for your education support, the courses must be in Malaysia.
I see.
So now let's say if you're going to study like in kind of online course, let's say, it's going to be from overseas, just like a remote learning. Those courses you won't be able to claim it.
Okay.
So if say like a university in the UK offers an online course in web design, I cannot claim.
You won't be able to claim for that because it has to be in a Malaysia incurred.
Malaysia incurred. So
Yeah.
I think, is that why I say Google is like partnering with local businesses to do this?
That is also one more thing, is easier for them as well, because if you're going to pay directly to Google for all this, it's also because of the exchange rate. For some companies, there'll be additional taxes to pay on top of that as well. Let's say the company wants to take the course as a wholesome course for their people or something, for their staff, then there'll be additional costs for it as well in terms of the additional taxes. So collaborating with the local people is much more easier for them.
I see, okay.
When we talk about filing our tax, I think comparatively, Malaysia compared to other countries in this region, how difficult or how easy is our process?
Okay, digitally, I think in terms of the online filing, the electronic filings and everything, Malaysia is much more easier than the other countries.
Okay.
We have more guidelines has been out. Our law has been the general deductions and everything has been quite consistent. So people have already generally know, okay, this can be claimed, this cannot be claimed, but there are some gray areas, exactly like for the sports equipment or even for the health insurance premium or something, exactly how to claim it. Because sometimes your insurance will have, this is your medical, this is your life claim and everything, you want to split. So you also need to split accordingly. You can't just put it everything into one line item. So that kind of a gray area still a bit of exists, but it has been, to a certain extent, has already been ironed out. But compared to other countries, I think I would rather say Malaysia is a bit more easier to file it.
Yeah, I think you all have heard. Okay, I think Malaysians filing of tax is one of the easiest in the region. Okay, so don't delay, get it done as soon as possible.
What is the strangest thing people have asked you about their income tax?
The strangest thing I've encountered, okay, like what I've said previously, also like suddenly when it comes to the tax audit, when I have too much of questions, too much of penalty to be paid, that's why they'll come and ask, hey, why there been suddenly so much of high tax to be paid? So then only all the issues will come up. Okay, how they structured their transaction, how the business has been incorporated, and all these the issues will be coming in. The other questions mostly we feel that will be coming in terms of the deductions for the expenses, and most of it will be coming in from in terms of when it's a kind of an issues with authorities.
After they have the issues.
Yes, because before that you won't
They
really
won't
know.
know.
So they
They
also
won't know,
won't know, because
exactly.
you can't blame them because they won't know what they're doing is right or wrong. They will just keep it as it is. Only when you are being selected, let's say another person can do a worst case, but he might not be selected.
Yeah.
So he might just continue doing that
Yeah, exactly.
until he being caught one day. Then only
Exactly.
he will know. Hey, okay, what's happening?
Okay. So if he been detected, it will be backdated. They'll check everything for the past 5 years, 6 years, 7
Okay,
years.
that is depends on how the authorities look at your case. If it's going to be a fraud case where you willfully evade the taxes, then they have no limited number of years. They can go to whatever year they wanted. But as long as within a certain, I mean, it's like, to say it's a kind of a genuine error. You really don't know, you thought this is claimable, and you just claimed it. Actually, you cannot. So then the maximum normally that will go not more than 5 years.
Okay. Okay.
And they also will look at the amounts as well, because just because you have the high risk of, let's say, for the deduction of the digital lifestyle or the sports equipment, or even for the medical checkup, the 1,000, they wouldn't be picking everyone for because then they want to pick for each and everyone who is going to file. So it's going to be not a feasible method.
Okay. Right. Right. Thank you, Ganesh. Yeah, you've been enlightening discussion about tax.